In the last fortnight, the New South Wales state government has embarked on a plan to sell off the state's power assets, and a move that could put some of the state's vital infrastructure in foreign hands. Australia's most populous state is struggling with a budget black hole of more than $1 billion, not helped by the global recession. The sell-off could see state-owned electricity companies acquired by existing retail players, or assets may be floated through an IPO. We'll discuss this and the interest so far from Asian buyers. We're joined by the New South Wales Finance and Infrastructure Minister Geoffrey. Also staying with us, our guest host Geoffrey Garrett from the US Studies Centre and Sri Jagaraj up in Singapore. Minister, good morning to you. Thank you for joining us here today. Tell us, this is of course one of the biggest power assets anywhere in the world right now. How is the time frame going and where are you at in the process?
We're progressing quite well. We'll be opening expressions of interest at the end of this month and closing them in mid-November. So it'll be a 6-week expression of interest process. Then we'll have a look at who is interested and then progress the process next year.
Do you have a sense so far of exactly how the buyers are stacking up? Because just a reminder for our viewers, you did conduct an international roadshow about 4 months ago. You met with 30 potential investors. More than half were actually from the Asia Pacific region. Yeah,
a lot of interest in Asia, and we're encouraging that. We're very happy about that. In particular in China itself, major utility companies very interested in learning about the Australian market.
What in particular is of interest to them? What are the key assets they're looking at?
Well, their interest is mostly in development sites, so in essence looking forward to building their own merchant plant and trading in our national electricity market. I think they're quite interested in looking at what a market-based system is like to operate in and to learn about that. In the PRC they have a more of a command economy, and particularly in the electricity system, so they're quite interested in learning about Australia.
Minister, on balance, how much are you looking to raise from these asset sales, whether you go down the IPO route or not? And overall, how much of it, how far is it going to address the public finances in the state?
Well, first of all, the most important thing about this is it's not about addressing public finances. In essence, it's a microeconomic reform, and we want to create a commercial framework that actually encourages more private sector investment into our electricity market. We haven't nominated a number in terms of potential income. There's a whole range of reasons for that. First one is that in our transaction process there is a suite of assets that are made available, and tenderers can actually mix and match the combination of assets that they'd like. For example, a gen trader business along with a retail book. Obviously, if someone was successful in that bid, they'd probably pay more for that than if they had to pay for one or the other, and you were to add them together. Also, with the gen trader contracts, the government's open about whether the potential buyer pays an upfront payment or a series of periodic payments over the life of the contract, and so you won't be exactly coming forward with a number at the end of the process. You could actually be it could be a number plus a series of payments.
Minister, can you give us a sense of how concerned the population and the broader electorate is about the possibility of these strategic assets falling into non-Australian hands? Is that a concern that you have, and how are you looking to address that?
Look, I think Australians are increasingly comfortable with foreign ownership. I mean, Australia has been built on foreign investment since its inception, so it's not something that is particularly foreign to us. And while some elements of our society may talk about it, in essence, most people are comfortable. What they'd really be interested in is knowing that they have a good level of investment and quality services provided to local communities.
I think this is such an interesting one going forward for Australia, because if you look at the relationship with China in particular, it's been all trade-based. But everything we know from economic theory and from practice is that trade and investment are complements, not substitutes. So more trade with China eventually must, I think, mean more Chinese foreign direct investment in Australia, even though Australians obviously have some concerns about these opaque connections between notionally private Chinese firms and the Chinese government, as the Chinalco Rio Tinto saga told us.
Indeed. Minister, if I can just switch gears here before we let you go as well, I wanted to talk about obviously a key event on the agenda, which is climate change talks overseas this week. How does a process like that bring to what you're trying to do right now? Because obviously you're still dabbling in a very heavy footprint in terms of green footprint. How do you assess those concerns?
So potential investors will know that they're going to have to factor in a carbon cost to their operational costs, in essence a fuel charge. The uncertainty rests around how much that should be and in essence a system that imposes it.
So does the uncertainty make the sale process a little bit more difficult?
Well, what it does is introduce an element of uncertainty in terms of valuing the potential assets that bidders would be interested in, and that will in essence affect our valuations, but they are valuation effects that have already occurred and are in essence on the government's books at the moment. So there is no loss of value in the sense that this transaction is proceeding at the moment. That loss of value would have occurred at the time of the announcement of a carbon cost arrangement in Australia.
You've mentioned the keyword value, and of course global equity markets have certainly been recovering over the course of the last few months. That must give you some sense of relief.
Well, it does. It's a very big job. I mean, this is 1/3 of Australia's national electricity market that we're putting up for sale. We're about 1/3 of its generation and 1/3 of its retail or its customers. So it is a major part of Australia's national electricity market, and every day that the capital markets continue to improve is definitely encouraging for us.
How much work have you done on the potential IPO?
Well, the decision to proceed with a potential IPO was only made a couple of months ago and formally endorsed by Cabinet just a couple of weeks ago. We're now progressing full steam ahead in terms of putting together the team that will progress the IPO. The decision with respect to actually proceeding fully with the IPO, that it actually will occur, won't happen until the first round of the tenders come in, and at that point we'll be able to make a judgment about whether a new entrant has entered the generation market at a value that is acceptable to government. If that has occurred, then we reserve the right to stop our transaction process at that stage and accept those bids. If it hasn't happened, then we will go to an IPO for the purposes of creating a new entrant in the national electricity market for generation.
Certainly puts you in a better position right now, given some of the IPOs have gone particularly well here in Australia. Anyway, thanks for joining us around the desk this morning. Great to have you with us.
Thank you.
New South Wales Finance and Infrastructure Minister Geoffrey joining us.